Hey everybody, Ashley Page here. Thank you so much for joining us on this week's educational vlog. What we do with the educational vlog, if you're new to it, is on Thursday each week, we take one specific topic to go deeper into it to help you build your library, as it were, on money and markets. And that understanding helps you interface with us better, which we like. That is in compare and contrast to what we send out on the portfolio vlog on Monday, where the guys will give you a deep dive on what's happening with markets for that week, and Tuesday what we send out from our research partners. So we also, with the educational vlog, try to give you a topic to help you sort of slice through some of the popular press noise that you're getting, and we think we have a good one for that today. And our title for today's educational vlog is, where does manufacturing really need to get back to as a percentage of US GDP? Major topic now. First, let us give you some historical context. In the 1950s, manufacturing was about 21 to 25% of the US GDP. This is what I jokingly call the Ozzie and Harriet period. In the first quarter, if you roll forward, in the first quarter of 2005, or a little more than 20 years ago, it had dropped from that 25% level down to about 13.1%. Where it is now, as of the first quarter of this year when it was last measured, it's down into single digits at 9.7%. So that you see from the 1950s, we've fallen quite a bit. Here's how manufacturing stacks up in the current economy. First of all, if you look at our GDP as a percentage, the largest is finance, insurance, and real estate. That's the largest component now at about 21.3%. Second, what we hear about most are professional and business services. That's the second largest component at 13.3%. Government is third. It's at 11.4%. That's divided in between 3.6% federal, 7.8% state. Manufacturing is now in fourth place as our largest GDP component at 9.7%. And then fifth is education and healthcare at 8.8% of GDP. What's the summary here? Manufacturing has gone from first place and it's barely hanging on to fifth place now. There were two major time frames when we had a precipitous drop in manufacturing recently. The first was from 1980 to 1985, but the most predominant one was from 2001 to 2009. This is a staggering figure. 1/3 of US manufacturing jobs disappeared in this period and haven't returned. And this is the worst since the Great Depression. Most of this loss was in non-durable goods, going to low labor cost areas, primarily Asia, Latin America. Also, the Chinese shock, in quotes, hit us, occurred during this period when they entered the World Trade Organization, or WTO for short, and China has become the largest manufacturer in the world, and that's really been since 2010. It's not all gloom and doom, though, because the United States does still very well globally in four main high value-add industries. One is aerospace. We can build a jet. Number two is in high-tolerance machinery. Three is in autos, and four is in pharmaceuticals. And you can see that those are four industries where you have to really leverage a lot of innovation and know-how. So starting with our question at the top of the log, where do we really need to get back to? We really need to get back, where we're at that 9.7% GDP range with manufacturing now. If we could rotate some of this manufacturing back, and you're seeing that effort now, if we could get back to at least 15% from the roughly 10% where we are now, it would have a huge impact. We're never, because of the way the world economy is structured, we'll never get back to that 25%. But if we could elevate it back up to about 15%, that would be a huge impact. One of our research partners that we think so highly of is the consulting firm McKinsey and Company. And they've done a deep dive on this, and they predict a decade-long accelerated GDP growth should we get back to more of a level like that. And specifically, if we did, five things would occur. One, there would be a significant employment increase for middle skill level workers that don't need a college degree. This in turn strengthens the American middle class. Secondly, it would enhance our national security, particularly in areas such as semiconductors and defense. You've heard that with the rare earth discussion. Three, it would improve our supply chain vulnerabilities by shortening them. One of the main reasons that COVID really kind of wrecked us financially is it disrupted almost totally the worldwide supply chain. Fourth, it would boost innovation and productivity. This is a really interesting statistic to me. Manufacturing accounts for 70% of business R&D spending in the United States and 55% of all patents. Manufacturing is a great environment for innovation because people are always working on things, how to do it better. So both R&D and patents really benefit from that. And fifth, it would provide better regional economic balance across the country. And this is what we mean by that. Currently, there are 500 counties in the United States where manufacturing still accounts for the largest employment, but many of those levels have been left out. If we could reshore a lot of this manufacturing, I call it restoring the soul to a lot of these communities, especially in areas that have not benefited from the rotation to industries such as technology and finance. I'll close with a great example of this from my own hometown in North Baldwin County. For years and years, I'm from Bay Minette originally, and for years and years, our largest manufacturer in the town and in the county was Standard Manufacturing, privately held company. The owners were friends of my parents. And we always had great employment for them for 50 plus years. And what that allowed the town to do is to have good disposable income within it, whether you were college educated or not. My wife will tell you, Standard has now closed. And I really worried about my hometown when that happened because I thought it would just suck a core out of that. Fortunately, we have a new manufacturer that's come in based in Atlanta that is a $16.2 billion worldwide sale aluminum smelting and rolling plant for a wide variety of industries worldwide. So the main reason that it's great for my own hometown to have gotten that is it will keep good middle class income going in the town without a college degree. And it just really enhances the core viability of the town. I will say quickly, as I've noticed, for example, even though this large new plant in Bay Minette's not open yet, they're already one of the largest contributors to charities in the town. And they're not even up and operating yet. So it really spreads out with a positive impact other than just the direct employment. So we hope that this information has been helpful to you. Again, there's been a lot of popular press about this, but we felt we've narrowed down on some of the analytics that you can understand where we're trying to get to. Along with this topic and any other from our educational vlog, if you'd like to know more, feel free to call me directly, anyone on our portfolio team. Also, you can engage with us on any social media platform. So until then, have a great week. Thanks.